Welcome to the Rick Helps Real Estate Show. This Sunday night edition, June 1st. Got a little bit of thunder and lightning going on outside. We sure need the rain, and I hope we get a bunch today, but it's kind of looking like it's kind of wimping out on us. But I'm going to talk to you today about where I see listing counts going right now. And you saw a lot of chatter out there around the country about the increase in canceled listings. I'm going to show you where we are, show you where we're at, also with expired listings, which is going to have a big impact on this week's numbers, and as usual, where we are with interest rates, and going to take a look at foreclosures and zombie properties. That's another topic that's floating around the country quite a bit. So let's start out with where our inventory is right now, and it has flatlined a little bit with 26,772 down to 26,708. It's going to go down about 650 homes by the time that number updates tomorrow morning, based on my 7-day moving average. Now, I mentioned to you talking about canceled, and canceleds are averaging for us anywhere between 600 and 750 a week. That's not a lot. That's where we've been trending. So the increase in canceled listings that we're seeing nationally, we're not feeling them here in Arizona. Now, at the beginning of every month, as soon as we go from the 30th to 31st to the 1st, we always see an increase of expired listings. It's been going up exponentially just about every month. It reaches its peak at the end of December when you roll over to January 1st, because everybody writes listing contracts to expire at a certain date, and a lot of people write them to expire December 31st. So January, boom, 1,500 expired listings. Then they start showing back up again by the middle of the month. What I'm seeing today is we're almost up to 1,000 expired listings again. Those are I give ups. I tried to sell my house. Didn't work. I'm not going to renew the listing agreement. Now, some people go find another agent and go, this one will do so much better. Then they'll probably lower the price, but they didn't price it where it should have been, sat on the market too long. So they said, well, I'm taking it off. Now, it's not always pricing. Sometimes there's just things about the house, things about the neighborhood that are just making it difficult to sell. It varies by block, street by street, but primarily it's price, and it's a difficult time now to determine what kind of price to set for your house. So work closely with your agent and make sure you have a pricing strategy, not just price. In other words, how about a 10-10 rule? If it's been on the market for 10 days and we haven't had any traffic, let's talk about whether or not we're going to go down another 10,000 or 10% or whatever it is. Make sure you have that conversation up front. Now, what we're seeing on our market here in the Cromford Market Index is that Fountain Hills has actually increased a little bit in favorability for sellers. Chandler continues to erode, as does Avondale and Gilbert. Gilbert's had a tough month. Now, this chart here, I include in my newsletter every Monday morning. You'll get it here. You can really take time to read it and take a look at the commentary that you have here from the Cromford people, and you can look at the mortgage rates as well. So that comes out every Monday morning at 7 o'clock, and the link is down below if you haven't signed up for that. Now, speaking of newsletters, I got a copy of a newsletter this week, and the agent said, look out for July, the middle of July. Things are going to pop. They're going to explode. Interest rates are going to be down, and it's going to get busy, busy, busy. Sorry, pal. I just don't agree with you. I don't see anything that's going to change in the next 6 weeks. I don't see interest rates changing. Even if in the June meeting, Chairman Powell comes out and says, hey, we're going down 1/4 point. You're not going to feel it. You're not going to see that make an enormous change in rates. Yeah, we might go from 7 to 6.8. That's not going to make buyers rush out there, because buyers, let's face it, you're waiting for some bargains on prices. And in some neighborhoods and in some cases, people are starting to experience some success. Not enough to make people flood the gates going out in the middle of July. So if you think the market's going to explode in July, I'm just not in that camp. Now, see me the middle of July, find out if I'm right or if I'm wrong, but I don't see it, because I also don't see inventory increasing. I showed you how it's flatlining, going to go down a little bit. That's seasonal. But what's going to make inventory start increasing going into the summer? I don't see it. I don't see it unless we see interest rates come down. Now, the bond market is sitting back and going, we don't know where the tariffs are going to take inflation. Till we get a better handle on that, we want a better return on our rate when we buy bonds because they buy bonds to have a hedge against inflation. So they're not going to want to get 4.5%, 4% return on their bonds if inflation creeps up to 3 and 4 again, because now they're losing money. So they're holding back. They're not purchasing as many bonds as they were. And when you don't purchase as many, the rate goes up. And that's what we're facing. I don't see that breaking anytime soon. Even the big bill that's out there now is it's not slated to be finalized until the 4th of July. So if you're waiting for improvements by the second week of July, you got to wait for that bill to be passed, and then you got to wait for the bond market to react to that. So there's a lot of news out there that's just floating around and muddling along. In fact, look in my store. We have a muddling along t-shirt now, thanks to Monty in Utah. Here is the Freddie Mac Housing Price Index. Now, this is a index, not actual price declines. It's kind of difficult. If you go back here, this big spike where we're up here, where you can see, and then it dipped way down here. Well, the difference between up at the top here in this red line, down the bottom here where it says minus 0.5%, was about a 13% discount in prices. So that took a pretty major move to make that. Now, here's our peak here, and we're down here. What's that mean for our prices? Well, right now, our annual appreciation is rolling just a little bit above 2%. So we haven't gone negative yet in our average annual appreciation rate. Now, some of our monthly appreciation rates have gone down quite a bit. What we're really seeing coming down, though, is asking prices. So again, when you're looking at some of the headlines and you see that, asking prices are down 15%, that does not mean that the average sales price has decreased. So make sure you disconnect those two. Now, sales prices in July will be down because of the volume that we see today. Contracts are being written today to close in July. So when the July readings come out, or the numbers that come out in July, we'll be looking at June, and we're looking at May. They're going to be down because we're already seeing it right now. We're feeling it in the contract. So you're going to see some more average sales prices down. And this is what you're seeing now on price changes and price cuts. They're still pretty high. We had 3,269 there and 3,314 this week. So a lot of people are out there, cutting their prices. What's interesting is we're averaging about 3,000 contracts every 7 days. Over the holiday week and going into this week, we're down to 2,711. We have been lower, folks. Around Thanksgiving, we get down to about 2,200 contracts. But it's short. It doesn't affect the market much. It just kind of says, well, Thanksgiving's slow. What about all these zombie properties? Zombie foreclosures on the rise. See which states are hardest hit. Have you heard about this? I haven't, so I thought I'd read it. Zombie foreclosures are up, and the hardest hit areas are in the South and Midwest. Now, what's a zombie property? Well, they analyzed county tax assessor data for 104 million residential properties for vacancy, broken down by foreclosure status, owner occupancy status in the second quarter of 2025. And what did they find? They found that the difference between the first quarter and second quarter was they were up slightly from 2.9% versus the same period last year. Zombie properties, which can fall into disrepair, negatively affect property values in a neighborhood as seen as a sign of an unhealthy market in the economy. We saw a lot of that in 2009, 2010. Where are the zombies? Well, folks, they're not here. And we're not seeing a whole lot of action going on when you look at zombie properties or pre-foreclosures here in our market. In fact, here's what the chart looks like right there. It's still way down. This is 404 pre-foreclosures versus 494 in March. So that's an April number there. I don't expect May to be much different from that. So we're just not seeing it. Zombie properties are properties where people have just walked away from them. They're boarded up. They're sitting there. You can drive around Phoenix. You don't see a lot of them. And then one of the reasons is because I get text messages every single day. Rick, do you have any desperate properties for me to sell. I'm looking for junk. Investors are looking for zombie properties in our market. They want to find that house that needs a lot of work. If you know of one, hit me up because my phone blows up every Monday morning. I'm looking for some junk. What have you got? I don't have anything for you. Now, the Fed, here's our Fed's preferred inflation gauge eases in April. It's above the 2% target. Well, then why didn't they lower rates if we're getting that close? Again, they're waiting. They're waiting to see if this tariff battle is going to add to inflation. So far, we're not seeing any inkling of it, but things don't change overnight. We're turning a big ship. It's moving slowly, and that's what we're seeing. This is our Cromford Market Index, and this is continuing to go down. And this is measured every day. We're down to 73.6. Getting the message here, every indication that we see that we're looking at for our market is not that prices are going to go up at all this summer. Everything that I'm looking at that I see is showing me that prices will continue their gradual decline. I don't see them going down in huge drops in prices. I see the asking prices starting to get a little better, getting closer to that actual contract price. But keep in mind, they're also contributing, on average, $10,000 towards concessions. So we're not seeing the wheels fall off the wagon yet, but I am not seeing a busy July coming down the road. Now, how long can this continue? I don't know. There's a lot of things up in the air, a lot of things going on with the Fed, going on with fiscal policy. I've seen some really great numbers that make things look good. I've seen some other things out there that make you go, huh? So I don't know. I'm just going to watch it on a weekly basis. Do me a favor. You have any questions? Shoot me an email, rick@rickhelps.com. Take care.